So I had this particular level in mind to take this trade from on USD card. This was the level, this drop base drop level here. But market didn't get to that level. Drop base drop level preferred version. Market didn't get to that level this last week, and then we saw this bearish move to the downside, which also left this rally base drop level here. So this is also a level for me to pay attention to. And let me clone this. And I've already placed my entry here. But in the case where the market moves into this other level above, I am covering for both levels, and that's why it's no longer $65 risk, this $70 risk. So level on top of level, accounting for the level above. So we'll see how the next week and the following days ahead plays out. But for now, this is where my take profit is. This is where I have my take profit in the future. Let's see how it plays out though. But I'm expecting a bearish trend continuation on the USD card. On silver, I'm actually still waiting for my level or my entry level to trigger, but we are still far from it. Way down below. If you don't get filled, it's good. It's still good because it's a high risk entry because of the drawdown level I'm in right now. Because I'm managing presently just $600. So that is high drawdown. So I'm using very little risk. So if I'm sticking to $65 risk, and the lowest I can risk on this silver trade is 100, and let it load 100, and that is even $200, the lowest I can risk on this trade. So you just know that I'm stretching it. I'm stretching that $65 risk that I'm supposed to have. If I said this is, no matter how I actually want to adjust it, it's still it's still within that same level, $185. Nothing changes. So that is a lot of $65 on one trade. That's why I said if it moves without getting to that level, it's still not really bad. And why won't I take the trade from here? This level, this leg out is not really, it's not really decisive. It's a leg out that is still being faded. I need impulsive moves for me to make up my mind on the new trend about to, like, make up my mind and know, okay, I've concluded my analysis and I know a new bullish trend is about to continue on silver. But for now, it's just choppy. So I rather take my first stab at silver when we eventually get to this point. And I'm not planning on shorting it because within the week I had the smart idea of trying to short silver to this level since I'm waiting for the market. I had an idea from here. And when the market got to this point, it looked like it was reacting to this level, this supply level here. But see how the market would have stopped me out, and that is money going into the wind. So instead of shorting it and trying to be smart, patience basically is just what I'm trying to. That is summary of all this talk I'm talking. Let's just be patient and wait for the level that we already have in mind. And the levels we are even waiting for is cheaper. Right now, silver is at $57 per ounce, and we want to buy at $48. 57 and 48, that is like $9 interest, and depending on the amount of contracts you are buying, that is that is a very mad risk to reward. That is mad discount for you. So that is on silver. Euro for this new week. The only thing that will make me actually pay attention to euro will be valuation and seasonality. Because if I'm trying to use COT, then I will actually be more long term. I'll be more bullish on euro than bearish, but there are actually no demand levels for me. Not at all. There's absolutely no demand level, but they are valid supply levels above here. And when this new week starts, let's see how it goes. Let's see how it goes. But for COT, I'm not paying attention to COT for euro, but then seasonality would be something I need to pay attention to. According to the 15-year seasonality, bearishness should begin 20 something of August, not my window. But on the 10-year average of seasonality, we can still anticipate bearishness coming pretty soon. So we'd work with that 10-year seasonality and that supply level we have there. We'll see if we can refine it to get a better risk to reward probability on that trade. Then even the 5-year seasonality average is still saying basically the same thing. So still that window next week would work it, it will work with it. Then for valuation, I actually like what valuation is looking also. I like the way valuation is looking. The yellow one is gold, so we're not paying attention to gold. Yes. Mm, it's just dollar that I need to pay attention to. So we're above the mean line on short-term valuation, and then seasonality, then plus high quality level of supply, level on top of level, covering both of them. So going into next week, that is definitely what my level will be looking like. Then if I want to refine it the more, yeah, mm, ideally 1 to 4. That is just the habit I want to actually build now. 1 to 4 risks to reward. Why? Because regardless of 3 trades loss, you still have, if one of the trades which usually happens more frequently than not, eventually you would get a 1 to 4 risk to reward trade, or even two at the time. So even if you've lost 3 trades at that 1 to 4, it would actually recover those trades that you lost and recover it properly. If I still want to refine this level, I would refine it, but first I'm setting up this base first, just setting it up first. Then we would now refine from there. So this is daily time frame. If I want to refine, I would have to come and use this preferred level. It really change anything. I want to forward come earlier, I think, but just like USD card, we might have the market leaving us behind and would now try and play catch. But then on the 4 hour time frame, preferred version, preferred version here. 3 hours, 4 hours, basically the same level. So I would not want to complicate things for myself, because if you stay on an analysis for so long, you might eventually confuse yourself. So sticking to the preferred version from the daily time frame would be what I would do. So instead of waiting that long for 1 to 4, we would get a 1 to 4 weeks to reward earlier. So this is what the trade is going to be looking like next week. Also, I would have to replicate that on. Mm, short. 1 to 4 weeks reward still. So once the market open, then I would now be able to set this as a pending order. But for now, this is just the drawing tool to get an idea of where our trade is going to be starting from and going into next week. So this is it. And 1 to 4 will be here. Because before we get any valid demand level, it's going to be way down here before we have this particular demand level that is a very valid impulsive level that we would have to pay attention to, and that would be the preferred version of that level. Have to. That is a level you cannot ignore because that is clear institutional intervention. That is clear. No retailer can cause that. So that's the next valid level that we can pay attention to. So holding this trade shouldn't really be a problem. The only storm along the way might be here, but then by that point we would have traded our stop loss to break even. And once we trade our stop to break even, it would be a risk-free trade and we'll see how it plays out. But then depending on the conviction of the trade, we might not even trade anything to break even. We'll just allow it play out on its own. That's on Euro USD. Then we've talked about USD card already, Canadian dollar, and for the Canadian dollar, the main reason why I'm just observing it the way I'm observing it is because of present COT. The COT is extremely bullish on the Canadian dollar. Valuation is at this point already overvalued short term. Long term, let's see what long term valuation is looking like. Long term valuation is already creeping up above the mean level. So for Canadian dollar, I would, like I said, I have this level below, and if the market should come back to this point, you would know that this valuation would have trailed below the mean line, and that would be actually nice. What adjustment I can make is just wait for the preferred version. Since I'm combining both levels, I'll just wait for this preferred level. That would be the adjustment I'll do when the market open for USD card. So for USD card, I would trail. I would have to adjust this level here and have it as the preferred version entry. And then again, it's still possible the market comes and take. So instead of that, I would just prefer taking the wider version because I do not want to be beaten twice by this same change in trend. And then you see all the others are at the wider version, and then I'm just chasing preferred version because I want to save few dollars and the trade goes out of my hand and I'm not able to catch it. So I'll just stick to the wider version on the CFD. I'll just stick to the wider version. But for Euro, it's a completely different story. Or for here, This is how it's going to be. Then Nikkei, I was quite lucky. I closed Nikkei once the market opened. I closed Nikkei once the market opened, not necessarily closing it. I trailed my stop to break even. And when the market came back down, it got stopped out at break even before it could do further damage. So that was a that was a good decision I made. Other times it might not work out, but at this time it actually worked out well. That I was actually awake and I was able to save a bit on Nikkei. There was an entry if you watch Brent's latest video on Nasdaq, but I didn't take that entry at all. On the Russell, this is the only level that I can actually think of taking a trade from the Russell. Well, we would see. This was Nasdaq trade. I didn't take this trade on Nasdaq at all. I didn't pay attention to it. I was actually waiting for a trade on Apple, but it didn't work out yet because I have a pending order on Apple. The market is moving away from that level. I have a pending order from this particular point in the market here. If the market fails this level, then there's another entry above. This is already a pending order on Campus Fund. This is the only prop firm I have right now, but that will be changing pretty soon because the main because this channel I actually want it to be more about the general prop firm a lot of people are used to, not just Campus Fund. So I would have a secret weapon to passing these prop firms and actually making payouts from them. It's not just giving you just only content on campus funds now. It should be more than that. So this is Apple. The market moved away from that level. Well, who knows? I don't know how next week will play out. I'm just waiting to see how next week plays out. But I don't want this level to escape without me. That would be painful. But then, absolutely nothing we can do about it. We still not chase it. We can't chase it. It's out of our reach. It's out of our reach. We take trades that are within our reach. And I'm glad I didn't even take the trades in the levels above. Well, that thing gapped like crazy. Like crazy, man. Nothing would have saved. What I mean by gap like crazy, even if the trade I took this wider version and then it went up, and I trailed my stop to this level here, thinking, okay, market closed here, and maybe no matter how the next day open, if it trails, it will stop me out from here. See where market eventually opened because remember candlestick body patterns. Remember this is where candles the market opened and market bought. So it would have taken out more than more than you anticipated. That's why stocks can be crazy. And the other time where this kind of move is to the upside, you would feel on top of the world. But that's just it. Market gives and the market takes. The market give and market takes, bro. So just risk management can save you sometimes, but sometimes more is down is just stuck because you might manage your risks properly, especially on the stock market, and then because we are trading the CFD and we are not using different brokers out, I know you can be able to even at pre-market you can secure your positions, but I've fallen for this multiple times. Let me even show you on IBM. That was something that opened my eyes to this reality because I had a trade on IBM within earlier this year, which was this from here. This trade was in profits. You can see this trade was in profits here. I trailed my stop to this level, right? I trailed my stop to this level, and the market, ewo. See what the market did now. I traded my stop to this level. Market opened here. So overall, even if this trade went to loss straight up from here, this was where my stop was, right? But when the market opened even below my initial risk amount when this trade started. even though we are in profit and I had already trailed. So this was an eye opener to how dangerous the stock market can be. So let's just glance and then see if there's anything I might be missing out on. Let me let's see. I already have my position on Euro USD set, waiting for the market to open so that it would become a pending order. GBP USD not clear for me. Euro USD, like I said, has been set. Australian dollar still waiting for the level above. New Zealand dollar closed early, but a win is a win. A win is a win. I don't know what you're saying, bro. A win is a win because this was where I took this entry from. Got here and then eventually got stopped out from here from trading stop. And then I didn't want to trade it below here and lose more chunks, but then market is turning, giving more profits than that level. And Brent trailed his stop so perfectly. But then it is what it is. Canadian dollar waiting for next week, and we'll see how everything plays out on the Canadian dollar. The final few, Japanese yen on steroids. Such an intervention. This was very crazy. So Japanese yen, crazy. Nothing to be done here, except there's a level I can pay attention to on the weekly time frame. But for now, it's quite. Oof. Trying to catch anything on Japanese yen is beyond catching a falling knife, because similar to what happened here, and what time was this? This was July. And what time is this? This is also July. And what date? This 8th July. And whenever this falling knife ended was 5th August. Not necessarily even ended. Where it actually ended was September. So I don't think I'm planning on catching any of this right now, because I would have said weekly level. I might be biting my finger in the future, saying why didn't I just take this trade from here? Because 16th September, would see though. But I would want to see what next week does. Because with this level, with this massive candle, no. That's dangerous. To try and get involved in any of this mess. Just allow the market do its thing. Monthly time frame. Also, the only valid level on the monthly time frame would be something here. So we would see if the market give it time. It might break here. Might still see more bearishness until we get to this point here. This is where we would start considering any other level on the lower time frame. But for now, it's quite dangerous trying to catch that falling knife from this point. Daily time frame. Don't tempt yourself, boy. Psst. See it in with temptation, right? Nah, I don't. It's not worth it. It's not worth putting money behind. In my mind, but my second mind is telling me this is an uptrend. This is a drop base rally level. Not as impulsive, but still a rally level. And nah, forget it. There are a lot of fishes in the river, so I wouldn't tempt myself to that. The place I even look slightly impulsive is this point here. This is the point where I would say, yeah, I can consider taking this trade in the future. But for here, nah, man, I'm ignoring this. This is not my trade. This is not my trade here. Nah, not at all. This point is not my trade. I rather wait for the market to get to this point and then know that I'm covering level on top of level, and that is a better point of the market to consider in the future, especially when it will be going in line with September from last year that we saw the market reacting to. 1 to 4 here. This is for a future case. This is for a future scenario adjustment. So this is what the trade will be looking like in the future. Let's see. See, even by eye was very close. So at 1 to 2 trail stop loss, at 1 to 4 full TP. We'll see how it goes, but that's see when we did the analysis, trying to catch this falling knife. I don't want to try catching it next week. I'll prefer whenever this would be in the future, especially if it's in September. September is, call it September 16th. But we'll see though. We'll see, this is the only point where I will become bullish on. I'll become bullish on USD JPY. This will actually be a very beautiful trade. Oh. That is the thing. It's people that watched to this level that will actually, to this point of the video, that would actually see this very lovely possible entry. If you've watched to this point, don't forget to drop a like. This might actually be a very solid trade, and we'll see how it goes in the future. But for now, USD Japanese yen, USD Swiss franc, nothing for me on USD Swiss franc for now. JFrog is a trade from last week. Took it from here and covered level on top of level, just above it right now. We'll see how this plays out. This is a stock trade, but I'm focusing on currencies. Those are my trade on the currencies. Very slow month, but I believe something can happen, especially with good effort. So if I do the right thing, I know I'll be out of drawdown. And if I do the right thing, this balance here wouldn't be 43,000. This would be $45,000 back, because I'm tired of seeing $43,000 here. So in the future, this would be $45,000 plus some extra profit, maybe another 670. This is 2nd August. I'm saying this because I see it in a parallel universe. That would be my universe. I would be back above break even, and I would be in profit, and document all the trades that gets us there. So as of 2nd of August, these are my pending orders. We have silver, we have USD CAD, AUD, USD, platinum, ARM, and Apple. So let's go over the ones that I mentioned that we didn't talk about. This is what my trade on ARM looks like. I'm still waiting to see if we get into this level, feel this level on top of level. We'll see how this plays out. I actually want to even trail this beyond 1 to 4, but I don't want to be greedy. 1 to 2 break even if we get to 1 to 2 at all, but 1 to 2 break even, 1 to 4 might be full TP, or I might just let it trip to 1 to 8, which would be wilder. 1 to 8 here, that would be 400 and something dollars, which would be crazy. Well, then ARM has done some magical moves in the past, and that's why I'm holding on to this level here, this particular cluster here. We'll see how it goes though. But then that's ARM. The next trade is XPT, which is platinum, and this is what the trade is looking like, just like silver. And this was a trade given by Burn. So $163 risk here and $204 risk on the other trade on silver. But then we'll see how everything goes. That's all for this weekly outlook. I'll be seeing you guys on the next weekly outlook. If you've watched to this level, don't forget to like, don't forget to subscribe. This is all stars aligned trading. Stay safe. 30 minutes mark was and ciao, bro. Stay safe.